Hey friends, thanks so much for tuning in. We have back on the line our good friend Andy Hoffman from Miles Franklin. We're going to try hard to get Andy on the line every couple of weeks for shorter, meatier updates because things are changing so quickly. We want to stay on top of the latest breaking economic news. Andy, thanks and welcome back.
Well, thanks for having me. And, certainly there's a lot of meat to go through in this short amount of time between, it's quite clear that we've seen these fake employment reports forever, but starting about 3 months ago, they've just decided we're going to go hog wild making up stuff. And, in my podcast that I just taped this weekend is called Manipulative Suicide because there was no reason to do that. I mean, the numbers were so blatantly obvious and all they accomplished was getting interest rates to go up, which will kill them. And at the same time, you have the currencies of the world, the whole currency contagion reignited last week. You're seeing record lows or near record lows for many of the world's currencies, and the commodity collapse started again. So I really don't understand it. And then, of course, you have this weekend, the rhetoric, and not just rhetoric. I mean, the whole Grexit thing looks like it may happen within a few weeks now, which is going to absolutely destroy the whole Eurozone and the finances of all the banks that lent money to Greece. I mean, this is really tragic and catastrophic what's going on.
Yeah, and you're referring to the non-farms payroll report on Friday. I wrote this quote down from you on Thursday, Andy. You said, given tomorrow's NFP report in which the government will try to convince us that hard data be damned, jobs are being created at a record pace, end quote. You couldn't have been more spot on because on Friday they came out with a straight face and they tried to convince the American people that unemployment in this country is at a mere 5.5%. And how they can say that with a straight face is beyond me because there are a lot of people being laid off across the country. And Target, where I used to work at the headquarters for 10 years, just announced that even though they laid off 550 people in February, the CEO announced they are laying off thousands more over the next 2 years. This non-farms payroll report is just as absurd a piece of propaganda as could possibly exist.
And it's always been that way. I mean, heck, there's even been whistleblowers like the one that came out and said, yeah, the October 2012 report right before Obama's reelection, we were told to fabricate it. I mean, there's evidence that people have admitted this. But again, like, we've talked about these reports forever and what a joke they are, but it's really been the last 3 months where they've literally gone berserk. Just, I'm not sure what the motivation is to try to make the numbers look so ridiculously good when all you have to do is look at the internals, as we always say, and you see, I mean, the labor participation rate fell again last month. The amount of people leaving the labor force was more than the people that supposedly got jobs. And of course, we now know that the jobs that they create, you can get a job for 1 hour at McDonald's, and it's the equivalent of a 40-hour manufacturing job, according to the BLS. And then you got 130,000 birth-death jobs. But the fact remains, I mean, it's a fact that new business formation is at a record low and new business death is at a record high, and the world's in a global recession. So why would anyone believe that there's these jobs being created because businesses are failing? It makes no sense at all. And then, of course, you look at what kind of jobs they are and who they theoretically come from and the seasonal adjustments, and it gets to the point where it's just a comedy. And again, all they had to do was simply say, yeah, and it's in line with the expectations, and they would have avoided the carnage. But instead, they've got the dollar now exploding higher, which is only going to kill corporate America. Remember, S&P 500 revenues are now expected to be down this year, and the more that the dollar goes up, the worse it's going to get. Which is pretty scary for the historically overvalued market with the highest multiple ever. I mean, across the board, and more importantly, what it does to the currencies around the world that are crashing. I mean, the euro, they haven't even started QE. They're starting it today, and yet the euro has fallen something like 11% since year end and 25% in the past 12 months. So they're going to have a deadly combination of inflation and deflation, and then throw in what's going on in Greece, where seriously, I mean, I told everyone that deal last week wasn't even a deal. It was just a can kicker of a few feet. And here we are. It looks like they may default as soon as a week or two from now.
Well, you've recently also said, Andy, and I quote, an historic monetary crisis is certain and much sooner than expected, end quote. That comes from your recent audio blog, number 82, The Mythical Services Boom. Maybe that crisis, Andy, is why Maestro Jr. Bernanke, as you lovingly refer to him, says the president should have the power to declare economic emergencies. end quote. There are economic emergencies on the horizon, and it seems to me that the powers that be are just lining up, using their fascist handbook to lock this thing down. They've played all their cards. They've exhausted all of their outs. Everything's been spent. Trillions have been spent and thrown at this economy, and still we find ourselves in this death spiral. The death spiral, and I say that because look at the Baltic Dry Index. Look at the real rate of unemployment. Look at the people that are on food stamps. There is an economic crisis coming, and it's going to come sooner than expected.
Yeah, I mean, look at the 20-year low in the home ownership rate that I just saw this morning. At the same time, lumber prices are down something like I think like 30 or 40% in the last year or two, and most of it in the last few weeks. And yet they'll say, yeah, but there's a housing recovery. I mean, there's no housing recovery. I mean, the house next door to me just sold for 11% less than the house three houses down sold at a year and a half ago. I mean, there's no recovery in prices. There's no recovery in housing. There's no recovery in the ability to buy houses. And certainly the real employment rate and the nominal and the real wages have been going down, down, down. And, aside from, as we said, these mythical service numbers, like, I mean, you have the Chicago PMI goes from 58 to 45. I mean, that's a level you haven't seen since 2008. And then they tell you that the service industry is still strong. What service industry? You mean the services that are linked to the bubbles, like in the stock market? I'm not sure what services these are. They just make these things up. The real business of America is collapsing. The biggest business in the S&P 500 is energy. It's a third of all the capital spending, and it's all about to be written off. And they're laying people off left and right. And again, I'm back on energy. They said the BLS said in the last 2 months only 2,900 people have lost their jobs in the energy sector. That's what they said, even though there have been tens and tens of thousands of announcements. So again, I've been predicting for some time that the universal understanding that these numbers are BS is got to come at some point soon, because now there's never been a bigger disparity between reality and some of the numbers that come out.
Well, Andy, let's talk about the economic realities. Let's talk about oil. What's happening with oil? I've seen the price of a gallon of gas climb now from about $2 to about $2.40, $2.50 in just the past month or so. What is going on with oil?
Well, look, I was an oil analyst for 10 years, and to this day, I still have trouble understanding the vagaries of refinery runs and the difference between the weather and the driving season. So there's a lot of nuances, and then there's strikes at refineries and all kinds of things going on, a lot of noise. But the fact is, look, the price of oil, it fell from 105 to 42, and now it's 50. And, so it's sitting near the lows, and we just hit all-time high inventories for both international and U.S. crude inventory. In fact, last week was the biggest ever build, and it's getting to the point where people are seeing tankers sitting out in the Gulf looking for a place to go, where the Cushing terminal in Oklahoma is almost full, and the expectations are more and more builds. What I've been talking about for a month now is the obvious emergence of what I call the oil PPT. All you have to do is watch this morning. It's Monday morning. It's 4 times already. They are just desperate. It's been going on for 4 weeks to keep the price above $50 a barrel. It's no less blatant than watching the gold cartel attack gold and silver prices. Because as I wrote an article a few months ago, well, I wrote 2. One was called Crashing Oil Prices Portend Unspeakable Horrors, and I wrote that when oil was over $80 a barrel. And the second was called That Other Achilles Heel, because no matter how much these guys manipulate markets and put out fake numbers, if oil keeps crashing, it crashes the economy of the world. All the sovereign nations that depend on it, all the corporations, as I said, a third of American capex spending is in this sector. So there's no doubt that they are in there right now trying to keep it up. And look what they're creating. They're creating these historic premium disparities between the front and second months, because they're, the paper, you can't manipulate oil the way you can do gold and silver. It's just a much bigger market. So again, you got the manipulative levers moving on all fronts right now, and they're failing. Aside from, as I say, last to go markets like paper, gold, and silver, and the Dow Jones propaganda average, they're losing control of everything.
Yeah, and what occurs to me as I'm thinking about this through the lens of history, Andy, my wife and I bought our first house back in 1996. It was $150,000, and at that point, our mortgage was 7.5%. They're trying to tell us that the economy is very healthy with 5.5% unemployment. If the economy were so robust and so healthy, I don't think people would be able to get 30-year loans for 3.5%, 4%. If this was a healthy economy, savers would be rewarded for savings. People would be getting returns in savings accounts. People would be able to get returns in CDs. In a healthy economy, 7.5% as an interest rate for a 30-year mortgage sounds reasonable to me, Andy. What would happen if interest rates went back to where they were when we bought our first house in 1996?
Well, I mean, healthy, right now we're cancerous. I mean, we're in the terminal stage of cancer. You can never go back. The fiat Ponzi scheme is fully expressing itself to the point where debt is so large that there's no way of going back. We can never get back to a point where even the slightest increase in interest rates could be tolerated. That's why Janet Yellen I mean, look, when Janet Yellen or Bernanke, when they do their Humphrey Hawkins testimony like she did in Congress last week, I've made a point to discuss this. They never change their monetary policy. They never even hint at it. And yet she completely changed it in what I called the most dovish FOMC, the most unequivocally dovish FOMC statement in memory. She basically said, we're not raising rates. We won't even think about it for some time now. Because she knows that even if they're putting out good numbers, bad numbers, it doesn't matter. The whole world can't handle the higher rates, even the slightly higher rates. I mean, we have $18 trillion of public debt here, and most of it is short-term finance. So every 1% increase rapidly causes nearly $200 billion increase in deficit, let alone all the homeowners. We have historic debt now of corporations, institutions, financial institutions, individuals. So of course we can't handle any of this stuff. And then, the other thing is that all this monetary financial engineering and money printing has caused subprime to come back. It's bigger than ever in auto loans right now. It's growing rapidly in the mortgage sector again. I mean, what do they think this is going to work out better? The economy of the world is vastly worse. The debt is vastly higher than it was back in the mid 2000s, and currencies are crashing around the world. So why would anyone think it's going to end any better this time?
Yeah, I don't think any of our listeners believe it is going to end any better this time. In fact, I think there's going to be a debt jubilee, but it's going to be for the bankers. And, there's no better case point and evidence of that than someone from the IMF admitting recently that the Greece bailout was really just to help German and French banks. It really had nothing to do with helping the people of Greece. There will be a debt jubilee, but it will be for the bankers. It won't be for the people.
Well, we didn't need the IMF to tell us that. I mean, this is public knowledge that like 90% of all of those bailouts went to financial institutions. And they're financial institutions, by the way, which are more insolvent than they ever have been. And I tell everyone to look at NBG, National Bank of Greece. Years ago, I called it the most important stock in the market because when it goes, everything goes. And, it went up from a buck or two up, a buck or a buck 20 up to almost $2 when that deal was announced, which I said was the most fraudulent deal ever. It's back down to $1.30 today. I mean, Greece is going bankrupt. They're not getting any more bailouts. Heck, the people don't want the bailouts anymore, and the government doesn't want the bailouts. People don't even want the new government anymore in Greece because they're too dovish. So look, the bailouts for Greece are over. They're not going to survive. They're certainly not going to survive this year. I'd be surprised if they make it through the 4 months in the supposed extension period. And when that goes, all that we've talked about for years is going to go too. I mean, there's hundreds of billions of dollars that were lent to Greece and to the other pigs. And there are these political parties like Syriza everywhere. The National Front in France, the Five Star in Italy, the Podemos in Spain, which just started last year, and they're probably going to win the presidency in December. I mean, it's across the board. The same things are happening everywhere. There will be a debt jubilee. And will the central bankers who will they be able to bail out now that their balance sheets are completely full?
Well, guys, as we have this conversation with Andy, this will be a little bit shorter than our normal conversations, but we're going to do them more often. Andy, before I lose you, I want to talk about the Huey smash because it warrants saying that with Dow at 18,000, 19,000, 20,000, 30,000, they're just going to keep running it up, right? You've been talking about the Dow Propaganda Index for as long as I've known you. Meanwhile, as they tell us the economy's so healthy, imagine a world without mining companies. Imagine a world where they can't pull out copper and silver out of the ground, all the stuff that goes into the economic powerhouse, which is Silicon Valley. Once those mining companies are dead and buried, What type of world will we live in, Andy? Because I think it's really astounding that the Dow can be at 18,000 and we see mining companies absolutely decimated.
Well, I mean, the Dow is up because it's manipulated up by the PPT, and gold is and mining companies are down because they're manipulated down. The only problem is they've overplayed their hand because they have permanently destroyed the industry, and I mean permanently. Look, I worked in the industry until 2011, and that's when I got out, and that's when I sold all my mining stocks because I realized this industry is marked for death. Because they want to keep sentiment down. The problem is they have in fact destroyed it. I mean, they're out of money. They just had PDAC conference in Toronto last week. The companies have no money left. There's no more junior mining. There was no junior mining sector when I left it 4 years ago. Now there's truly nothing left of it. There's no discoveries. There's no companies. There's barely a handful of shells that have just enough to keep the doors open. And as for the majors, they're in even worse shape. I mean, they're all on the verge of bankruptcy. I just wrote an article that said initial mining earnings validate peak gold. It is peak gold. They're all production is falling across the board. They're trying to get rid of debt. They're going to be shutting in production. The CEO of Pan American Silver just this week said that they are all-in cost is $16.50 an ounce, and they're in the lowest quartile of the whole industry. I do believe, as I predicted earlier this year, there'll be a major mining paralysis this year, like we saw in the oil industry back in the late 1990s. They're all going to merge. They're all going to cut whatever's left of spending down to nothing. They're going to shut in production, and it'll never come back. Because even if prices do come back, it takes forever to get people back and capital back. And of course, when prices really come back, the governments will just nationalize and windfall tax anything because it will be because monetary gold and silver views will have come back into vogue. So again, what they have done is kill the golden goose, and anyone holding the real thing, gold and silver, is going to benefit it. But holding mining shares, there's a good chance that in the very near term, meaning by the end of this year, some of the biggest names will be gone.
Anyone holding physical gold and physical silver will benefit. That's a great quote and a great way to end this call. Andy, can you tell people how they can do business with you guys?
Sure, milesfranklin.com, or call us at 800-822-8080. We've been around for 26 years, A+ Better Business Bureau rating, never had a complaint in all that time. And you can always email me at ahoffman@milesfranklin.com.
An historic monetary crisis is certain. Guys, we've been talking about it for a very long time, and we're documenting the collapse for you every chance we get. Our guest has been Andy Hoffman, the marketing director at Miles Franklin, milesfranklin.com. Thanks, Andy.
Thanks very much.
Thanks, guys, and thanks for supporting us at sgtreport.com, thephaser.com, and thelibertymill.com. Real news 24/7. Have a great week.